Hey everyone, it's Corey. Now welcome back to my January market update for Yakima and the surrounding valley. As always, this is not meant to predict the future or freak anyone out. This is about understanding the data, what's actually happening, why it's happening, and how to use that information, whether you're buying or selling or just paying attention. So January is kind of always a strange month in real estate. Everybody tries to get their deals closed in the month of December, so that way everybody can start the new year in their new home. And it's quiet, it's a little emotional, and it's full of almost, and it's heavily impacted by things that have nothing to do with pricing, like weather, holidays, and momentum. Today, I want to talk about what the local data does show, what it doesn't show, why the national scary headlines about contract cancellations matter, and what I'm watching closely as we head towards spring here in the Yakima market. So one thing you may have seen in the headlines in the month of January was that over 40,000 real estate contracts were canceled nationally in the month of December. That's a really big number and it sounds alarming, but context really matters here. December is already the slowest month of the year for real estate. Buyers are distracted, lenders slow down, appraisals take longer, and it's not uncommon for people to get cold feet around the holidays. Whether that's on the selling or the buying side, making a move near the holidays can be stressful. So on top of all those normal things, you could layer on the interest rate uncertainty we're experiencing, the end of year financial fatigue, and winter weather got really extreme in certain parts of the country. So cancellations spiked. So what this tells me is that not that the market is collapsing and all of the, things are crazy. It tells me that buyers and sellers are being cautious and timing sensitive. And that theme definitely is showing up too. A lot of the uncertainty in the fiscal market right now is causing people to hold back or to want to be extra sure before moving forward with anything. And that's understandable. So let's talk a little bit about what we are seeing here locally in January. So the median active list price is sitting around $419,500, and that is up over year. But the median sold price, so not the active list price, but the actual sold price came in at $345,000, which is actually slightly lower than last January. So the average days on market jumped to 109 days compared to 94 last year. And that last number always gets people nervous, so let's pause a little bit there. First off, I always like to reiterate for anybody who's watching that's not in the Yakima market, we do not have a stop clock on our days on market. It goes through even when it's under contract through escrow through to closing. It still is calculating that entire time. That is not normal. That's just what our local MLS does. It's also really important to look at this not just on paper, but we also need to provide some interpretation here. So one really important thing that does not show clearly in the market reports is how many homes, especially above $800,000, are on their second or even third version of their listing. So most listing terms are 180 days. They can be shorter, they can be longer. It's usually an average of 180 days, but it could also be expired out early. So when I say it's on its second or third version of its listing, it means that the home was listed, it expired or was withdrawn. It was then relisted, maybe with new photos, pricing, or strategy. And when that happens, the days on market clock often resets. So on paper, it looks like a fresh listing. It looks like a shorter days on market. But in reality, that home may have been available to buyers to see for months. Now, this is getting especially common here in the higher price points, 800,000 plus, 1 million plus. We're seeing it a lot more often in those price points. And it's not necessarily a bad thing. It's the reality of that sector of the market right now. But it is important to know that the days on market data is somewhat artificially deflated because even though the overall averages are still rising, some of those homes aren't getting cumulative days on market. So if it went a full 180 days, got relisted with another full 180 days, and then finally sold at 90 days, the third time it was listed, that's not adding up to the total days on market. It was 180, 180, and 90. Instead of the total cumulative days, which would be 360 plus 90, it's over 400, right? It would be over 400 days. And so just know that that's the case, and pay attention when your realtor is talking to you about these things. You need to look at the competition and the other homes in your price sector and see if that's the case, so you can have reasonable expectations. So when we see and break down the market by price point, we get different behavior in different markets. So right now, homes under about 400,000 are still moving pretty well. They're still competitive, and they're still really sensitive to condition and price. If it's presented really well and it's priced well, it's still usually going to move pretty fast. Now, once you start getting above 500,000, you're going to see some more inventory. The buyers are getting more and more selective, and we're seeing more relistings and longer decision cycles on the behalf of buyers. So in fact, the $500,000 segment now makes up a very large portion of our active inventory locally. That doesn't mean those homes will not sell, and it doesn't mean that they're all priced incorrectly. It just means that strategy matters a lot more than it did a few years ago. So next I want to talk about something that sounds a little bit silly, but it's absolutely real. Historically, real estate activity picks up noticeably after the Super Bowl. So why is that? So football season ends and people start to shift mentally towards spring. Also, people are starting to get their tax refunds, and buyers start getting serious again because of that. So January is often a holding pattern before all of those pieces start tumbling. So then February becomes the warm-up month where people kind of get going again. And then March is when the momentum really hits and really starts. So if things feel slow right now, that is normal. But one really, really big wild card we have this year is the weather. We have had a very mild winter so far, which usually helps activity because showings are easier and appraisals are happening faster. People are more willing to move when it's warmer out, right? But, and this is really, really important, I need you to hear what I'm saying here. If we get a major dumping of snow, everything can screech to a near halt. Showings will get canceled, inspections and appraisals can get delayed. Contractors may not be able to work on aspects of the home that need to be repaired. Closings slow down as a result. So that doesn't mean that deals die necessarily. It just means that they pause. And if you have a listing that is not yet under contract, it can mean that all of a sudden your days on market shoots up, because if we get a dumping of snow that takes several weeks to clear, you can just consider that all added time to your listing term. So I'm watching the weather over the next 30 to 45 days because it could heavily impact how our February numbers look. So here's some other things that I'm watching really closely as we head towards spring here. I'm looking at pending activity after the Super Bowl and how many relisted listings finally go pending. I'm also watching price adjustments and seeing if they're accelerating, especially in that $600,000 plus price range. And I also want to see how buyers react to stability versus rate drops. I don't know how that's going to look moving forward, so I'm just going to keep watching buyers' reaction to that. And if you're a buyer, this is a great time to be educated and ready. And if you're a seller, strategy matters a lot more than optimism right now. So if you're unsure which category you fall into, that's exactly what I can help with. If you have found this helpful, make sure to like and subscribe, because these market updates are where I break down what the headlines do not explain. And if you want to talk about your specific situation, buying, selling, or just planning for now, my contact info is below. And you can always email me at corieburck@gmail.com. I will see you in the next one.